So in this session, we will address a very interesting scenario that a lot of you will find yourself into, and we will figure out what exactly is going on. So this is the case of a missing profits at the end of the day. So I was talking to a trader friend of mine last week, and he found himself in the same situation where the stock that he bought went up throughout the day. And at the end of the trading session, he was sitting on a profit of 80,000 rupees. So he saw this profit 80,000 rupees right in front of his eyes at 3:30 in the afternoon. But when he logged back in after a couple of hours, somewhere around 4:30 or 5 o'clock, he noticed that his profits went down from 80,000 rupees all the way till 50,000 rupees. So if I simplify this situation a little bit better, so this trader friend of mine, he bought a stock at 100 rupees, which went up to all the way, let's say at 108 rupees. And that is when he last saw at 3:30 what the price was. But when he came back somewhere around 4:30 or 5, whatever time in the evening, he saw that the price went down from 108 rupees all the way to 105. So what exactly was going on here? So let's take a real life example to see a similar situation. So right now this is 3:29. So I have exactly 1 minute left for the market to close. And I have one open position. I have one share of Jindal Steel, which I bought at 317.7 rupees and which is currently trading at 325.5 rupees. So I'm sitting on a profit of about 7.8 rupees as of now. So let us see what happens at 3:30, right? So the market is currently trading, as you can see, but the moment the market stops trading, we will see what will happen to this profit. So just keep an eye on this 8.2 or 8.15 rupees, whatever it is right now. Let us see what happens when the market closes. So right now this is 3:30. As you can see that the market has stopped trading and my profit at the moment right now is 7.9 rupees. Let's see what happens after a minute. There you go. So now you can see that the profits have gone down from 7.9 rupees to 4.65 rupees. And the latest traded price has also gone down to 322.3. So the potential profit of almost 8 rupees. This is with one share, by the way. Had I, let's say, bought 10,000 shares of Jindal Steel and Power, I was sitting on a profit of, let's say, 80,000 rupees. So from 80,000 rupees of profit, in this particular case, my profit would have gone down to 46,500. So clearly there is a huge drop in my profit and there has to be a very good reason why it happened. Now, in order to understand this mystery, we need to understand the difference between the last traded price and the closing price. So the closing and the last traded price at the end of the day, they are not the same. So if I take the example of my friend, the last traded price that he saw by 3:30 was 108 rupees, whereas what he saw eventually at the end of the day, somewhere around 4:35, was 105 rupees. Same is the case with us. So when we saw for Jindal Steel and Power, the last traded price was somewhere around 325 rupees, whereas the closing price that we saw at 3:33 was somewhere around 300 rupees, right? So there is a clear discrepancy between the last traded price that we see at 3:30 and the closing price that we see somewhere around 3:33. So let's first start with the last traded price just to understand exactly what it is, right? So last traded price is literally the last traded price of the day. So in case of Jindal Steel and Power, you can see that right here, exactly at this point of time, the last tick, 3:29 minutes and 59 seconds, the last trade that was executed. So the price at which it was executed, that is called the LTP or the last traded price for that day. And for Jindal Steel and Power, it was 325 rupees and 60 paisa. And the last traded price is simply determined by the demand and supply rate. So throughout the day, the buyers are coming, the sellers are coming. So that is exactly what happens at 3:29 and 59 seconds. The demand and supply at that point of time, whatever that happened to be, will dictate the price, that is last traded price for that script for that day. The closing price, however, is not exactly the last traded price. It is the weighted average of the last 30 minutes of trading. So if we again take the example of Jindal Steel and Power, the closing price for this particular stock will be the weighted average price of all the trades that were taken from 3 o'clock all the way up until 3:30. So in other words, for the closing price, the stock exchanges, they take the last 30 minutes of trades that were conducted from 3 o'clock till 3:30, take all of them, put them in a calculator, and then they calculate the closing price based on that. Now this discrepancy between the closing price and the last traded price can be bigger if the stock fluctuated widely in the last 30 minutes, right? So if the stock basically, let's say, stayed stable from 3 o'clock to 3:30, the last traded price and the closing price pretty much would be very close to each other. Whereas like in the case of Jindal Steel and Power, if it fluctuated a lot in the last 30 minutes, then you can have a closing price which is very different from the last traded price. So going back to the example of my friend here who saw the prices at 329.59 at 108 rupees and later saw it at 105, because of which his profits went down to, let's say, 50,000 rupees. The reason for the discrepancy is that what he saw at 329 was the last traded price, whereas what he saw later on was the closing price. So in this particular case, is this a real loss? Is it that from 80,000 rupees the profits have gone down to 50,000 rupees? The answer is yes and no. So if he ends up selling this stock, let's say in the same trading session from 3:40 till 4 o'clock, which is the post trading session, he would be able to sell this only at the closing price, not the last traded price, the closing price, in which case he will have to sell it at 50,000 rupees. However, if he waits for the next trading session, then neither the closing price matters nor the last traded price of the previous day matters. What really matters is what is the new price that he saw the next day. Now, some of you might be asking that shouldn't the last traded price be exactly the same as the closing price? I mean, what's the reason for having a different closing price than the last traded price? And the answer is the stock exchanges do this to avoid manipulation. See, what happens is with a lot of stocks that are not traded very well, it can very easily happen that, let's say, an operator, a stock market operator, will come at the last second and place a huge buy order and thereby increasing the last traded price by, let's say, 5% or even 10%. So if at the end of the day, people will see the chart of that particular stock, it will look like the stock has gone up 5%, 10%, whereas in reality throughout the day the stock, let's say, did not do much or maybe was in the negative. So by manipulating the last tick of any particular stock, the stock market operators can give a perception that a company is fundamentally stronger and the stock hence is going up, and this can lead people to buy that stock eventually and can get trapped into schemes like pump and dump schemes. So that is one of the reasons why the stock exchanges want to give a more realistic picture of what happened to that stock at the end of the day. That is the real essence of why the closing price is a calculated value and not just simply the last traded value. Now, some of you might be wondering that what should I use for my analysis? Because you see the last traded price and you see the closing price, which price should I take for my own analysis? Well, the reality is that the closing price is what you see on the daily charts. Nobody, no software or no platform will ever report the last traded price on the daily, weekly or monthly charts. Like in this particular case, when I see the daily chart of Jindal Steel and Power, the price that I'm seeing for this particular day is 322.35. So the bottom line is that closing price is what is always considered in the analysis, not the last traded price of that day. In fact, for all practical intents and purposes, last traded price of the day is irrelevant. And closing price is all that really matters in the long run. So guys, I hope that with this short video, you were able to understand the difference between the last traded price and the closing price, which one is more important, and why we see the discrepancy between the profits or losses that we saw at 3:30, whereas later in the day.